tax too. We're going to apply it to motor vehicles. Now there's many definitions of motor vehicles. There's this big subclass of property that's motor vehicles, which includes everything in that world, which are trailers and campers and all of those things. But for purposes of the title tax bill, it is only those vehicles which are self-propelled that meet the definition in 40-1-33, and they're required to be titled. So we have a group of self-propelled motor vehicles that aren't titled. They're either so old that they never had a title, or they've reached the age where the owner is not required to title them. So those vehicles will still be subject to that ad valorem tax through the system. So ad valorem tax, as we know it, isn't going away on lots of the vehicles that are still out there. So first of all, we have to have something that's self-propelled, and it has to be titled. Now, the next thing we have to do is say, okay, I now know which group of vehicles this applies to, but what do I apply the rate to? Now, today, if I walk into a dealer and I buy a vehicle, they're going to give me this vehicle, depending on how good a negotiator I am, this vehicle is sale price is worth X, whatever X is. So that's their starting point. And then if I have a trade-in, they're going to deduct the trade-in from that. And today, if I were to go buy that vehicle, I would pay sales tax on the price of the car minus the trade-in on that net value. That's what I would pay sales tax on. So if I'm sitting across the table from that sales person in that dealership, he knows what he's selling me the car for. He knows what they're going to allow me for a trade-in. And so he's able to work up that deal. Bottom line, most of us at the end of the day don't really care what the bottom line is. All we care is, do we have enough money to make the monthly payment once we roll that financing in? So most people don't really have a lot of concern about what the bottom line is. But now we have a different set of rules under title tax. Because of the fact that this title ad valorem tax is going to be applied to all titled motor vehicles, including those that sell from neighbor to neighbor, the legislature wisely said we need to control that starting point, what fair market value is, so that someone can't play games with a bill of sale. Now, I've made the comment a couple of times in training, we don't think taxpayers would lie, right? They might fudge it just a little bit, knowing that the bottom line would affect what they had to pay. So the legislature said, okay, we're going to establish that starting point. Fair market value is going to be based on the same value the commissioner publishes every year for all the vehicles in the state that are used for ad valorem tax. So we're going back to that assessment manual. And that's the value that title tax will be calculated on. Now, for those of us in the tax office, you put that vehicle in Gratis, which is the Georgia Registration and Title Information System, and it pops a value, right? The dealers don't have that same information without going to the manual to find it. So this has been an area that has raised some concerns, and because if they don't collect the right amount of money, they're going to show up in your office and not have the right amount of money. They may have too much, they may have too little. Now, the value we use currently for ad valorem tax is 40%. So we have published, or in the process of publishing on the department's website, a new manual that basically just puts these values out at 100%, so that the dealer can go to a manual and he doesn't have to do the math, and there's not the danger that somebody's going to calculate the title ad valorem tax on a 40% value rather than 100% value. The next thing would be if you have a used vehicle that doesn't appear in the commissioner's manual. This would be a unique vehicle that just perhaps didn't make it into the document we use. In that case, you have to go to another pricing guide And the commissioner has designated the NADA as that official guide. So you go to the NADA, and then you look at the taxpayer's bill of sale, and whichever of those is the higher is the value that will be used to calculate the title ad valorem tax. In the event you're one of those folks who just can't wait to drive that new year model off the lot, you've got to be the first one to take out that 2000, in this case would be the 2014 vehicle. That vehicle may not be in our database yet because we would not have gotten the information. In that case, you're going to use the bill of sale less any rebate to be your starting point. Now remember, right at this point, we're just talking about where we start, where that point is that we're going to start in our calculation. Okay? Now, the commissioner's values, just to give you some idea, by statute, those values are the average of wholesale retail. And that's statutory. We don't have a choice but to take wholesale value, retail value, add the two together and divide by 2. That's how complicated that process is for most vehicles. So that's where the commissioner's value is. So in many cases, it may be less than what the bill of sale is. But because of the casual sales, this is the way the legislature has defined the process. Now I've got my starting point. If I buy at a dealer, I can deduct the trade-in value. Only if I buy at a dealer. Again, we don't give credit for a trade-in if you're buying it from a casual sale. Because again, there could be, I want this car, but I'm going to trade you my boat and my microwave and 2 or 3 other things, and so at the end of the day, you're only trading a few dollars. So in the case of a casual sale, there is no allowance for a trade-in. In the case of a dealer sale, it's whatever is on the bill of sale.